Good morning, all traders and serious students of the market. This is Jeff Killian for the Vector Traders Consortium, VTCtraders.com. The time is now 11:16 a.m. on September 1st, 2020. As you can see in the right-hand side bottom corner of my screen, and I also want to get this in here too and do a refresh with the exact time and date we're at right now. So we check across the board with everyone who checks in that we are right on time, and the date is actually September 1st because we have a major market call that we want to demonstrate right here and now. I believe, based on our analysis here, there is a high probability that the market will sell off to the short side very soon. And as we go through this, we'll demonstrate some of the things that we run through on a daily basis. So let's do this, because if we are right, the world will know it. The most recent volume spike that came in here was based on August 31st. So that was last Friday's action for the volume as compared to the prices. Let's also note that we had an official pivot point high established here, and on the right-hand side of that was a down close as compared to the volume to the downside. Now we're going to start with the Dow and move through the S&P cash and end up with ES E-mini futures because we need to get a broad analysis on where this market is going to be in the near-term future. And we can't just analyze a singular market in order to do that. So the volume as compared to the prices comes first. The volume is in on the Dow equities, and we'll go right to short-term money flow, which is smart money. Institutional participation money tracker, whether the funds are really flowing into the market or flowing out of the market. Some of you are familiar with us as far as divergence analysis is concerned. A simple negative divergence in this case is where we have a much higher peak in short-term institutional money strength in the market as compared to a secondary peak in this case, which is much lower. Obviously signaling that the short-term smart money is now out of the market. And again, even moving down after the negative divergence, which is a higher peak connected to a lower peak and a lower price as compared to a much higher price, clearly indicating that the prices are trading up on inflated highs. This is a 14-period look back, so let's get right into the Chaikin money flow, which is a 21-period look back. And we also have a peak that's established at a level that hasn't been seen since 1/26/2018. That being said, the indicator has also fallen off of that previous level and traded through a certain floor level, and the trend line violation is in place. Now, this is clearly indicating that these prices should trade down in the near-term future because the true value of any indicator is to lead future directional price movement, and that's exactly what's happening here at this juncture. After that, let's take a quick look at the Chaikin oscillator itself, another major negative divergence as compared to the prices moving up on inflated highs. Okay, enough said on the Dow. What I really want people to see here at this point is outside of all the negative divergences as compared to the prices trading up on inflated highs is the volume that has come in that is not evident on the E-mini futures. And once again, here it is. And let's make it crystal clear. There it is. We haven't seen anything like that come in up until 6/26/2020. Okay, so let's let that go for now. And I do understand very well that there are options that are traded and expire, and there are substantial volume spikes that come in on equities markets. I do understand this, but I also understand that the smart money is smart for a reason. They will hide the tracks whenever and wherever they can based on how it's convenient for them and for the public not to know. Okay, let's move a little faster here and get right into the S&P cash side and get into the CMF. Here at this point, we have a similar but not the same configuration out of long-term money, 21-period look back. That hasn't been seen since 10/9/2017, that level. Not till all the way back to here. That's a long time, people. So historically, high levels where prices have turned around previously clearly indicates the possibility that they can again. And especially when we have a floor level that's been broken already, leading to future directional price movement that I'm pretty sure is going to trade down in the near-term future to some substantial targets that are going to provide more than substantial profits. Next chart we're going to take a look at real quick here is the, let's take a look at the MFI, and I believe this is the only thing that's holding up this market at the time, right? And why 500 stocks on the cash side versus 30 on the Dow. So what else? Do we have anything out of the Chaikin oscillator at this point? I believe we may. Let's reference that. Another negative divergence. So the evidence is definitely adding up here. And now that we get into ES, most people's primary market to analyze, because of the uniformity of the price chart patterns and the indicator formations as compared to the cash side, I think you're going to see something very interesting here. This is the all-time high market of yesterday. These are the various targets that will get hit on the downside when the market turns back around. A lot of room here to go all the way back down to where the market traded up into new highs, somewhere around the area of the opening of 824. So there's a lot of room for the market to retrace back to the downside at this juncture. Plenty of room. The market continues to trade down. Congestion here, free and clear area, almost with no downside resistance up until we get around to this point here, possibly even down lower. This remains to be seen. But these should be the levels that are fairly close to what we're looking at to trap the prices for price profit targets on the way down. On the money flow index side, a little more weaker at this juncture and then back up. So only short-term money holding ES up right now. But if we get into the CMF, here we have very similar, and we also have a short-term negative divergence here, people. And again, on the Chaikin oscillator, another negative divergence. So at the end of the day, it certainly appears that the market is geared up to go short. And the targets to the downside, as I mentioned earlier, right, based on what will happen today on market close, being Monday, September 1st, and possibly Tuesday, throughout the rest of the week, there should be substantial amount of profits going short, trading 3, 4, 5 times a day in real time, or going short on any stocks that have similar formations with negative divergences at the upper region of the subgraphs, looking for clear levels to get through to go short and trade them down to previous targets that exist on the actual stock charts themselves, or ETFs, or mirror funds. It's all the same, people. Supply and demand, who's in control, and when and where do we have any real business trading? So that being said, please bookmark us at vtctraders.com. We're going to have some changes to the website very soon, and some new pricing on older course offerings that will allow people who are on a budget, according to the current economic conditions. A lot of people are a little tight right now. We're going to do whatever we need to do in order to help you make this possible for you to begin or continue on your journey to becoming a professional trader. Jeff Killian for the VTC out now. We'll pick it up on the next vid. And thank you all for joining us today. It's been my pleasure.